Okay, so I think now we have quite a rich round of comments and reactions. I would like to bring the floor back to the panelists so that they can react, and a short round of quick reactions so that we can again come back to a second part of the debate. So who would like to start? I think Alex wanted to start, so I will give you the floor first.
The third wheel looting is essential. Yeah.
Thank you. I think there were two questions from James Wimberley at the beginning that I'd like to address. The first was on the link between the crisis and havens, and the second on the question of whether more effective taxation in developing countries might not just strengthen the hand of abusive kleptocrats. On the first of those, I'm a development economist by background, and often in development economics we're kind of working to catch up with where mainstream economics is. But in this crisis it's the other way around. 10 years ago I was writing about the systematic impact on developing countries of liberalisation of their international financial flows. Now, at the time the IMF were pushing very hard to be able to encourage that in every country where they work, but the evidence shows that systematically that type of opening is followed by a very clear pattern of events. First of all, there's an inflow of money. This creates asset bubbles, particularly in property, in the stock market, a few other places. It also creates a boom in consumption. Systematically, it creates no boom in productive investment. Eventually, for one reason or another, investors get nervy and money flows out. The bubbles pop. What's left is a population whose consumption drops very sharply as asset bubbles pop. In effect, exactly the same thing that we're seeing now across the world. The question is, where was the international financial liberalisation that drove the bubbles that we're now experiencing the popping of? The answer to a lot of that is that it was in havens, it was in jurisdictions that provide lighter regulation than others. I'll give you one example. The international banking accords require banks, for every $1 of assets that they have, of equity I should say, their initial capital, to have not more than $12.50 of risk-weighted assets. Now, the Bear Stearns vehicles, the holding company in the Dublin International Financial Centre, that was the cause of a lot of Bear Stearns problems and led to them going bust. For every $1 of equity, they had $119 of assets. How could they do that? Because of the complete lack of regulation in the International Financial Centre in Dublin. Now, I'm picking on Ireland there, but it's because it's one where the bank actually fell over and we have the autopsy to know what really happened. That process that Mike Dunn was talking about of regulatory arbitrage, of jurisdictions offering less and less regulation, exactly in the same way that they do with tax rates, that process was a crucial driver of the crisis, not a sideshow, as some have said lately. I think that's important to see why the G20's focus on this is not irrelevant. It is a fundamental part of making sure the system is fixed for next time. Very briefly, on the second point of strengthening the hand of kleptocrats, when you're seeing that countries that are dependent on aid, or more commonly dependent on natural resources for their government's revenues, what you see is governments that are completely independent of their citizens, governments that can spend the money on whatever white elephant they feel like it. And if that's coupled with a lack of transparency in financial markets, they can also take as much of that money as they like and put it in bank accounts around the world. There are very few things that we know that systematically improve the quality of governance, that reduce corruption. It's a long process, it's not easy to get rid of corruption. But the one thing we know that does, that strengthens the relationship between states and citizens, that makes states more accountable, is when states have to rely on their own citizens to raise income. Going back to the Magna Carta, what you see is once governments are dependent on their citizens, or even a part of their citizens, for their income, they have to be responsive to some extent to their citizens. And over time, the academic literature shows this systematically. States and regional governments that depend more for their income on taxing their own citizens than on other sources show improvements over time in governance and are left with the least correct positions. Corruption is a pervasive and terrible problem in development. We have to think about what's going to work over the long term, and what works over the long term is taxation. This is the only way that we can deal with that problem.
Well, I agree on every term of what you said. I'd like to get back to the question of the crisis, the connection between tax havens and the crisis. Well, as someone said, I think to put it very simply, there are two processes that are essential to that: is securitization and leverage. And the two things can be found in tax funds, in tax havens. Some people know that well, of course, here. But securitization consists in creating a kind of sandwich, top of which is fine, beautiful, attractive, good product, reliable product, and you insert into it other layers that are far less reliable. This is what happened with the subprime crisis, as everybody knows now. So most of the investors and the creators as well of those securities take advantage of the leverage, that is, with one minimal percentage of an investment, you manage to raise more and more funds. But when these funds are, of course, fragile, or made fragile because of the crisis, the collapse is close. You know that, in fact, those funds, those toxic funds, those hedge funds, 85% of them are in tax havens. Okay. Second point about corruption. I think that when we speak about corruption, we should speak about a corrupter and a corruptee. I don't know if that makes sense in English, but someone who corrupts and someone who is corrupted. Normally, we should have had with us tonight Eva Joly, who is one of the most famous French lady judges. She has now taken distance from her job and taken distance from France. She has gone back to, I think it's Finland, Norway, a country, sorry. And she was so disgusted with what she saw in our French system of justice, because she couldn't get access to many details in the dossier. And some of you have heard of Elf Aquitaine. I've heard of Angola Gate, in the same way as Britain has had a problem with BAE. And you know that even Tony Blair made it clear that no investigation would be possible. So we have politicians at the top who have made money for some time, for some other reason, don't want this to be revealed. We know that French political parties for years have been funded by this kind of practice, that is ELF, for instance. We have seen that in the trial. Millions of French francs evaded the countries in which ELF was working and went to tax havens accounts that, after 3 or 4 shell obstacles, led to political parties or operations abroad. So this is very important. Whenever you have someone corrupt in Africa, you have someone corrupting him in rich countries. I think this connection is the core of the problem, not corruption in the abstract. Well, the fact that Abacha had a big part of his funds evaded from his country to Jersey also suggests that even if you have the impression that Jersey is not that bad, and I know that this is probably true in many ways, it's not the worst, as I said, comparing it to Nauru. I think the fact that this has been made possible suggests that other facts have been probably made possible here, exactly in the same way, in terms of looting of the due wealth of the people in many countries. Thank you very much.